Crypto markets trade heavy after the merge is met with selling as macro drivers prove too much to handle. ETH vol gets destroyed as the event risk gets priced out. And BTC flirts with June lows, which if broken would open up a big next leg down. All this and more in this week's Crypto Insight. Okay, so crypto this week. Bitcoin retesting the lows, right? We are around that 18K area. So if we bring up the chart, obviously no surprise, we've been relatively bearish for a while on Bitcoin, assuming at some point it is going to break these lows. But that's kind of hand in hand with the bearish equity outlook. If it breaks, what sort of target are we looking at? Probably 10 to 12K as a ultimate bottom. Is that kind of view hasn't really changed. Personally, because I'm looking for a short-term bounce in stocks, I think this level might hold in the short term. But at some point, in the not too distant future, I suspect it will break. But it does feel a little bit oversold right now. Bitcoin, so it could easily have a bounce from this lower end of this range, basically, right? So it had a little bounce over the weekend. It tested it and bounced. It's probably looking to have another go. It all really depends on what the FOMC does. And if that takes risk assets down, then goodbye. Okay. If we do break 18, I mean, we're going to have probably quite a quick slide to 16, I imagine, right? There's not going to be a lot holding it up. So I think be careful there. So I would certainly have some hedges in place, right, if against your kind of holdings and stuff right now, because it's not out of the woods. Also on the institutional side, there's been no institutional buying of Bitcoin funds, Bitcoin ETFs, anything like that, right? So it's until you see that, and that's really only going to come once the macro gets better for crypto, and then you might get a more sustainable move higher. But yeah, it's just been trading very heavy, basically, right? It had a little flash of excitement because people were unwinding shorts against the Ethereum stuff the week before, but it got smacked down so quickly after that CPI number that it kind of showed its true colors basically quite fast. Yeah. If we look at Ethereum, obviously 1400 was supposed to be support. That's been taken out. So it's looking pretty precarious. This is a bit of a level as well, to be fair, this 1275 area. So I guess that's kind of your last ditch level to hold. Otherwise it's going to go and retest 1000, I imagine. Right. So that's kind of the setup. So obviously the merge disappointing the bulls. Now that it's out the way, we look at the spread. It's kind of broke down below this support level. So again, not looking great, but the macro is really taking over, right? So now that the ETH merge is out the way, the macro factors are the things that are in the driving seat. So there is definitely risk of this spread falling all the way back down here. I'm not calling for it, but I'm not ruling it out, right? So I'm kind of I don't have a massive sort of spread position anymore anyway. So I'm pretty neutral to what this thing wants to do right now. If we then look at the vols side of things, we definitely have had a pullback in realized from the highs in Bitcoin. So obviously we had two big 10% swings, but then it's found some stability. Implieds have also been kind of grinding lower, and you can see there's pretty much no carry whatsoever in the Bitcoin. So well-priced volatility there. If we look at Ethereum, obviously we had a big vol reset as we had been banging on about for weeks, and that's taken the carry back down to zero pretty much in Ethereum as well. Yeah. So, pretty well priced the volatility now versus the kind of realized that we have been seeing. We look at the term structures. Obviously you can see a decent shift down in Bitcoin. Long end not really moving as much as you'd expect. It's already looking quite cheap. Hence the reason why we bought some March 23s a little while back. But obviously the Ethereum surface needed to take a bit of a hit down anywhere between sort of 20 and 30 vol points wherever you want to look. Actually, no, the long end's probably not down quite that much. I mean, it's down maybe between 10 and 15 points. So that's where the term structure of the spread, obviously the white line was a week ago, the green line is today. we had got as high as 40 in the front end. We were around 30 in the sort of middle. That's all come down to around 20 vols for that spread. I still think that spread's got more downside. So if we look here, this is kind of the 6-month history, had a nice big correction in this thing, but to see it in the sort of 10 to 15 range, that's where I could easily see it settling there, to be honest, right? So if Bitcoin and ETH just kind of go back to kind of moving more in line with each other, I could easily see that spread compressing down to in that 10 to 15 range. So that's kind of what I'm thinking on that. In terms of skew, you've got more of a sell-off in Bitcoin skew than ETH. ETH skew still holding, because I guess people are looking at that spread and saying, well, ETH's still a good 20% from its lows of June, whereas Bitcoin's already there. So if I'm going to own any put protection, I want to own it on ETH rather than Bitcoin, because that's got more downside. So I can sympathize with that view, because I don't think the merge is just going to immediately change anything, right? That seems to be a much longer term story, right? But in terms of my positioning, everyone knows I've been short. That worked pretty nicely. Thankfully, I was owning some really short dated puts and stuff to protect it. So I pretty much made sure my delta was flat to negative the whole time. So I was short vol and not leaning long delta as we were actually sliding, which worked. I've probably covered about a third of my short Vega on Ethereum. Still long Bitcoin vol. So I'm going to keep that spread on to some extent. I'm going to try to keep that spread on and play that last bit of 5 to 10 vols of juice that I think it might still have. But I'm not going to run a big delta or anything like that. And I'm also, if we break 1275 on ETH, I'm probably going to cover another clip of my ETH vol, because I want to try and bank and monetize some of the money that I've made, basically. Too greedy with it. And then finally, in terms of crypto flows, what did we see? Bitcoin was pretty quiet on the flow side. Did see some sellers of September puts down here. That was kind of helping the skew come back down. Saw an October risk reversal buyer, 18K, 24K strikes, and then seeing some action on the upside in October and December upside around that 28 to 30K region. ETH definitely had more flows. We zoom in a bit on ETH. You can see here, 23rd of September puts getting smashed in the kind of 1200 to 1500 area. That actually smacked the skew as the merge was going on. It did bounce after spot sold off a bit, but there was definitely aggressive selling on that downside initially, as those vols were extremely pumped. And then 30th of September, saw some call buying in the 1600 to 1800 area. But if you look, there's quite a lot of pink, which is all 30th of September options all the way up to like 3,500 strikes. So that's just kind of people unwinding positions and kind of rebalancing their books basically post merge. And then the only other notable flow is these March 23 calls and call spreads going up. So you got like the 5,000, 6,000 strikes trading, and even as high as the 15,000 area, people doing call spreads. So selling the 5,000, so buying the 5,000 and then selling the 15,000 and doing that as a call spread in March 23. So a bit more of a longer term play in crypto. I think that's what we're going to get, right? If people do bullish bets on crypto in this macro backdrop, they're going to be having to place it in March, June 23, where, we might be closer to seeing the end of the tightening cycle. And that's kind of what they're playing. Yeah. All right. That's it from me on the vol side. Why don't I hand over to Aaron for a bit of on-chain?
For on-chain, Glassnode's analysis really honed in on Ethereum and taking a look at the merge, which is why you can see the title for this week is Exploring the Merge. So not much, really no kind of Bitcoin analysis from Glassnode this week, although I did have a Bitcoin takeaway from this ETH analysis that we'll get to towards the end. Basically, Glassnode went ahead and explored the merge by looking at trading markets and some on-chain metrics. The top two charts will be the trading markets. The bottom will be the on-chain metrics, where we're going to focus on some supply dynamics, as I feel those are probably the most relevant to us, and the price action trading and things of that nature. So starting out here in the top left, we're looking at the Ethereum futures perpetual funding rate. Quick reminder, these futures, these perps are futures that exist in the crypto world, designed specifically for crypto, where there is no expiration date. It's just an ever oscillating funding rate, either going positive or negative, depending on if people are piling into the longs or the shorts. if everybody's going long, that funding rate's going to go positive, and then the people who are long are going to pay that annualized funding rate to those who are short. And then the opposite is true. If the funding rate goes negative, those who are short are paying that annualized funding rate to those who are long. And so what you can see here in the top left is that heading into the merge, we reached a new all-time low in that ETH funding rate, reaching negative 1,200%, surpassing the previous low from March 2020 of negative 998%, basically meaning that as we were approaching the merge, those who wanted to be short were paying a 1,200% annualized rate to those who are going long just to maintain or put on those shorts. But you can see here, following the merge, we went back up positive very shortly, but now we're back to neutral, mainly suggesting that it seems that the short-term speculators have mostly cleared out who were trying to play the merge event. Moving on there to the top right, we're looking at the futures open interest denominated in ETH rather than denominated in USD. And the reason is that, as you can see here, that in the last few months, really since May, that we've increased by 80% in terms of the amount of ETH in open interest. But in that same time, we've seen in the last week, rather, we've seen a 15% decline from 8 billion to 6.8 billion in the USD value that's in futures open interest, basically meaning that we've seen an increase in futures leverage in the last week, despite the poor price action. And Glassnode suggests this is probably because many of these risk hedging positions have not been closed out yet. Now moving on to the bottom area where we're going to look at some of the supply dynamics and what it has to do with the merge. The first thing is here in the bottom left, where we're looking at the proof of stake net supply change. And so we kind of have a lot going on, but the basic takeaways here are, so this green area, it also has some red. They're just so small you can't really see, but the area chart is looking at the actual state of Ethereum blockchain right now, where we were proof of work. We implemented EIP 1559, which is the burn rate, back in August 2021. And then last week, we transitioned to proof of stake. Your orange line here is if we were always proof of work and didn't make the transition to proof of stake. And then your blue line here is a proof of stake simulation where back in August 2021, if we didn't just go EIP 1559, but at the same time went to proof of stake. And so basically what you're seeing is we're comparing all those different issuances. So you can see right now, if we had never made the transition to proof of stake, the proof of work would be spitting out 12.5 thousand ETH per day. Whereas the proof of stake version, where if we went to proof of stake back in August of 2021, we'd be at 772 ETH per day. And so you can see with the transition from proof of work to proof of stake, we're kind of right in the middle there at 5,000 ETH being issued every day right now. And so the takeaway is that, we are inflationary still, but we could see it's much less than it would have been. And then if the history is any note, if we get back to a time where there's more demand for block space, there's more congestion in the system, then we could see us going deflationary again, as that is what upticks the burn rate in Ethereum, is when there's a lot of demand and a lot of congestion in the network. Moving on here to the last chart in the bottom right, we're looking at the post-merge supply dynamics. So we're looking at what exactly happened with the issuance and the burn rate immediately following the merge and moving onwards. And so what you can see here is these green bars are showing ETH being issued, the red bars are ETH being burned. And in the first 12-hour window coming out of the merge, we were deflationary, as there was a lot of hype, a lot of interest in the merge. And so you had a lot of congestion, and that caused us to be deflationary, but it didn't last a long time. We immediately then, you could see that the green bars start to outpace the red bars, meaning that we quickly reverted back to inflationary. But it's the real takeaway is that in the 4 days since the merge, the proof of work model would have been spitting out roughly 48.4 thousand Ethereum in the 4 days from the merge to when Glassnode wrote this, which was either Sunday night or Monday morning, versus what we're actually have spit out is 3,893 ETH. So that's a 92.8% reduction in that issuance. So it is promising that we could, in the future, go back to deflationary as the macro kind of pivots and looks better for risk assets. People get more interested in Ethereum and DeFi and NFTs. You could see us go back to deflationary, which is what a lot of the ETH heads are excited about. So just a couple other things that I didn't include them in the slide, but they're worth looking into if you're curious about it, to go check out Glassnode's analytics and their analysis. Basically, with this transition from proof of work to proof of stake, the miners are no longer the people who submit blocks to the blockchain. They're now validators, right? And so validators in the ETH system is now at an all-time high at roughly 430,000 validators. And it's worth noting that to be a validator, you have to have at least 32 ETH. So that's 430,000 people with at least 32 ETH staked, and that represents 14.5 million ETH, which is roughly 12% of the total supply. So a really good amount. And it's worth remembering that ETH that is staked is locked and can't be moved, can't be withdrawn until after the Shanghai fork, which is the final fork, the final step of transitioning from ETH1 to ETH2. And from everything I could find, there still is no date. So that ETH that is staked is locked with no really timeline for when it will be able to be withdrawn. And then the other final thing is that Bitcoin takeaway. There was an interesting chart, which it makes sense when you think about it. But as we move from proof of work to proof of stake, the mining difficulty just dropped off the face of the earth, went flat to zero, which means no more mining revenue, which means there's a lot of GPU kind of computational space out there and ASIC miners that no longer have a use. So to me, it's just, I'll be curious to see if those find their way into Bitcoin. If you have some of the bigger mining operations, soak those up and put those online, which will be interesting to see as prices not appreciating, because basically what that means is the difficulty is going to go up, the revenue is going to go down, miners' profit margins potentially could go down, and you could see that miner capitulation that we spoke about in previous weeks happen again, as if the profit margins get too thin, the weaker miners are going to pull their machines offline, they're going to sell their Bitcoin. So that could be some potential sell pressure in Bitcoin specifically, if we see these miners, these ASIC miners, move over from Ethereum to mining Bitcoin. And that is on chain for this week. No crypto exposed equities this week, as Blockware didn't really have much of an update. But in the report, you will still see that spreadsheet table that compares the crypto exposed equities to Bitcoin's performance and the WGMI Bitcoin miner ETF. And that's on chain for this week.
Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.